Now, as Gopi just said, this TTIP is truly a historic undertaking. Short of completion of a Doha round or another multilateral undertaking, it's one of the largest economic pacts ever undertaken, and as we all know, it would join the world's two largest economies. Now, given that the average tariff level between the two economies is below 3%, the greatest opportunities for this agreement, of course, are going to be in addressing non-tariff barriers such as customs procedures and behind-the-border regulatory restrictions. In fact, the expressed ambition for this negotiation, for this agreement, is for it to be, and I quote, a comprehensive, ambitious agreement that sets the standard for future trade agreements around the world. So now a few statistics, of course, will provide some notion of just how large and how ambitious the TTIP undertaking really is. Now, these two economies encompass a population of 821 million people. That's 12% of the 7 billion in the world today, and it's the world's most affluent consumer market. Now, the U.S. and the EU, with all of their vast reach, account for 45% of the total GDP, 32 trillion of the 72 trillion that is generated by the world. And the two economies account for a third of the total trade in the world today, with all of the outreach. And these two economies already trade extensively with each other. The bilateral trade accounts for 632 billion of the world goods trade of 17.8 trillion, and 337 billion of the total world services trade of 3.7 trillion. So they are a big factor in total world trade. Now, the EU accounted for 21% of all U.S. goods and services exports, while the imports from the EU into the U.S. were 19% of the U.S. total. For the European Union, the U.S. market accounts for 17% of its goods exports and 25% of its services exports. The EU, in turn, received 18% of the U.S. goods exports and 32% of the services exports. So you've all seen the statistic that each day goods and services worth 2 billion euro, $2.7 billion are traded bilaterally. But trade is only one part of the envisioned partnership and of the existing economic relationship. Investors in both economies have roughly $3.7 trillion in direct investment in each other's economy. In the U.S., the U.S. foreign direct investment in the EU is $2.1 trillion, and the Europeans in turn have $1.6 trillion invested here. And this total investment in the two economies is associated with 8 million jobs. Now, for agriculture, which is the area of most interest to most of us who are here today, trade is also significant and very important to both economies. U.S. exports to the EU total $12.1 billion, making it the 5th largest U.S. market, as was noted earlier. And the leading product categories, the 5 leading categories, are tree nuts, soybeans, processed fruits and vegetables, wine and beer, and soybean meal. And those 5 categories, even though they're the largest and most important, account for only 40% of that total trade. So there are a whole range of other products in the U.S. that export in the amount of $7.5 billion to the European Union market. Now, the trade balance is one-sided, as you already heard before. The EU sells a lot more here than the U.S. sells there. In fact, it's $16.8 billion, and the EU is the 2nd largest supplier to the U.S. market, following only Canada. And the leading categories from the EU to the U.S. are wine and beer, thank goodness, essential oils, snack foods, processed fruits and vegetables, and other vegetable oils. So these statistics clearly indicate the potential for an even freer trade and investment partnership that a successful negotiation would create. And in addition to the employment and income boost to both economies from such an agreement, it could well provide strong momentum for greater liberalization in broader multilateral trade that the Doha round was unable to deliver, or has thus far been unable to deliver. While the benefits could be enormous, and this could truly be a historic agreement, we also have to be very realistic. There are a lot of formidable challenges that a successful negotiation will have to overcome. Tariffs, the traditional negotiating area, are very low, as I said before, so the major obstacles are very likely to be in other very sensitive areas. One of those areas is the agriculture and food sector, of course, and it could well prove to be the make or break issue in the agreement. Now, just consider the difficulty in resolving geographical indications, market access for EU dairy products in the U.S., comprehensive agreement on sanitary and phytosanitary standards, the precautionary principle, biotechnology approvals and labeling, and greater market access for U.S. products into the European Union. And all of this is before you even get into talking about farm subsidies and the amount and the form of those. So there are a lot of challenges, and there are a lot of very complex areas that have to be negotiated. So we're very